Boom. Yes, I believe we are live, ladies and gentlemen. Thank you for joining us today. This is Tio and the Arcane Bear. It is a blood out in the street day. There's a lot of fear going on. Some of it for very good reason, as we've gone over in some of our past videos. Although I would like to start today with less gravity and more levity. I've just learned recently that those are actually the opposite of each other. Never thought of what the opposite of gravity might be. So let's start with something a little bit lighter on today's list. I wanted to roll over here. I actually like to start my mornings here with, just so you guys know, with a little bit of a Twitter for the. First off, I like Sailor's strategy. If those of you that know this channel and myself, you know that I think that the consistency over time just pays much better. So I'm gonna. Let me know if you guys can hear this as it comes through. So.
There's no second best crypto asset. There's a crypto asset. It's called Bitcoin, right? Right? There's no second best, okay? But take all your money, buy Bitcoin. Then take all your time, figure out how to borrow more money to buy more Bitcoin. Then take all your time and figure out what you can sell to buy Bitcoin. And if you absolutely love the thing that you don't want to sell it, go mortgage your house and buy Bitcoin with it. And if you've got a business that you love because your family works for the business that's in your family for 37 years, and you can't bear to sell it, mortgage it, finance it, and convert the proceeds into the hardest money on earth.
Okay. So that was fun. I believe Sailor said this in some of his podcasts, like when Bitcoin was near its high. And first off, don't ever use leverage. It's pretty much a bad decision. So that was the levity I wanted to start off this morning with. When I saw that, I just cracked my shit up. I thought it was hilarious. That's always a good way to start the day. It was just something funny too. There was other things that I wanted to go over. Now, some of you guys were chit-chatting with me on the Twitter there as well. I brought up something here. Looks like a little bit of divergence to me. Now, again, I don't usually use the RSI too much, aside from looking just macro bottoms based off RSI, and that's usually closer to the weekly time frame, which we've gone over recently. But every now and then I like to poke around and just draw charts for fun to see what type of validity we get on these larger time frames. There were two bullish divergence. One that took place back here in May, which then caused the next breakout, and one that we're riding up into today. Now, a few comments on Twitter were like, well, you can't draw that many points. The time frame's too big. All I know about divergence is when you're looking for a lower price and a higher RSI. That's literally it. That's where you have the crossover and divergence. How many points actually are irrelevant, because you could technically draw points here too. This third point. So we're really kind of right on the tail end of what could be divergence here for this last note. As you can see, it's not just a slight, like if we were to zoom in here, like it's just slightly higher effectively, right? So this point where we're at is just effectively just slightly higher. Now, what I want to go over is from this point, let's go back actually to the main screen here. So we can see both of these drawn up. So I do suspect we're going to get some relief here in Bitcoin. Now, one of you guys had also mentioned that if the stock market goes lower, Bitcoin and everything else will go lower too. And we're not in disagreement with that. When people get scared, all prices will start to act irrational. We are in a very weird place, effectively. So the reason why we're in a weird place is because for longer than I've been alive, the US dollar has been printed at extraordinarily high, like unimaginable numbers, basically, for the normal person. And then funneled into areas which are not totally productive. Now, this happens for a number of reasons, and it's generally where inflation comes from, is actually improperly credited money. Now, because we could make a good argument that if you're able to give credit to the companies that are doing the right things and building the next big products, and that's in fact actually a really good thing, because you're generating more value for society as a whole. So there's a really good argument for inflation into the right hands of the most productive class of people as actually being a net positive. But as we've seen, when they go and print enormous amounts of money, when they do not put it in the hands of the most productive people, it ends up in the hands of people like fucking Janet Yellen and Jerome Powell, who have no goddamn clue what they're talking about or what they're doing, and they just willy-nilly give money out. They bailed the banks out in 2008, and we've seen this kind of systemic collapse, and what probably notably would just look like corruption or racketeering and collusion cases. You can find them far and wide throughout the financial and I guess even capitalist sector. I'm a big fan of free market capitalism, but that's not what we have. We have something much grosser than that. So one of the ways we like to look at this is actually by looking at the strength of the dollar. So a lot of this conversation has to come in with the Federal Reserve and what they're doing with the dollar. Now, the dollar is branded to all shit, hell and back. You can go to any country around the world and people are going to recognize the dollar. It's I very rarely talk about the value of the dollar because we're much more interested in what is better, what comes next. Obviously, we think this is something like Bitcoin, if not Bitcoin exactly. So because of this, we have to remember that the U.S. has done an amazing job branding itself. You can go anywhere around the world and you can spend $1, basically. That's phenomenal. What happens if all of the internet and electricity went out tomorrow? People are still going to recognize the dollar. They maybe even would accept it just because they think that it's the most trustworthy thing out there because of this kind of global brandability, right? So the dollar has some unique strengths to it that that bode to its favor here. And when they start increasing interest rates, what's always worried me about this conversation was, they wouldn't do that. They're not criminal. They're stupid. Now, over the last 2 years, I don't know, I'm assuming the most intelligent of you will recognize this probably pretty clearly already, but we may actually be dealing with a level of criminality and malice that's might be difficult to recompense or reconcile with, just even from a commentary standpoint. That's a big deal. So if we're dealing with a level of criminality instead of just stupidity and malice, which may be the case, we might want to start to expect the worst. Now, in expecting the worst, it's actually just a defensive modality, I think, in the long term. It's about building community, building value, and what products and services you provide to your community on a daily basis. Now, this can make you an enormous amount of wealth, regardless of what the current socio-economic currency is, whether it's a dollar or a won or a yen. Throughout our entire history, if you're producing value by providing service to the community, you become a wealthy person, generally speaking. So this is a part of free market capitalism. It actually works very effectively. It provides that product and service to the people that are most interested in getting it. But again, we have a very skewed and possibly totally criminally corrupt part of that. So knowing that more and more, I think we might want to prepare for more criminally corrupt actions, because that's what criminals do. They can double down on their dumb shit. So just something to be aware of. So here we have the dollar. Now, if the dollar starts to tighten and continues to tighten, what it's going to do is it's going to put a stranglehold on a lot of third world economies, because the way they buy their oil is by using dollars to buy it from somewhere that's not sanctioned. Now, what you're also going to see now is a rift in conversations of countries that actually work with Russia over top of the United States. So just north of us, we have Nicaragua, and Nicaragua is allowing Russian troops to train in Latin America. Oh, well, fancy that. You know why? Because that's where they're getting their oil from, their dollar. So the United States is making some imperatively dumb decisions, which I now believe may be criminally malice. So that's a weight to take into account. And this is maybe the most interesting part of the conversation, is that if we take a look at nature here, this thing I love so much and live in the middle of for good reason, as a flower grows, it at its fullest bloom is right before it falls to pieces and withers away, dies, and something new grows right alongside it. I think that what maybe we're witnessing, and in the throes of witnessing now, the death of one current kind of societal contract and the birth of what might become the next one. This would be, you could look at it from the targeted idea of hey, the Great Reset, and this is the new normal, these very clear propaganda talking points that people seem to provide, or the potential for nature itself, which is usually the duly just creator of the universe we live in, and at all corners it seems to find a way to reprimand those who do not pay attention to it, and then reseed itself as the pride and wonderful owner of this universe. So nature's powerful, so we don't want to negate that, and I usually try to understand that like optimism here is important, because I think that when I look at the world around me, it ends up in this pretty beautiful thing. It seems much more precise than chaos. So I guess what I'm trying to get to here is this kind of long-winded philosophical rant to what I think we're witnessing is the death of a culture, effectively, and the birth of what will be a new one. Now, I think the birth of the new one still stems from things like Bitcoin. It's going to stem from technology. It's going to remove and disintermediate the people who have taken that power and found out ways to corrupt those channels, whether it's regulatory agencies and the companies that they're supposed to be regulating, and that disconnect. Anyways, okay. So I'm trying to get as much across in this conversation as possible while getting to a point in the result of what I think is happening in the economy. Because of that, as they go to strengthen, as they go to tighten, you're going to starve a lot of economies around the world. And those economies are going to have no choice but to look to Russia or Asia for support. So that support, or the IMF, it's going to come from one of these three. So it's going to come from the IMF, like the international monetary frauds, or it's going to come from the other guys. So somewhere along the way, people are going to be looking for help. And you have very few countries like El Salvador that stand out of the crowd and say, hey, we're trying this thing that's kind of something new. So ultimately, when Bitcoin goes down this low, we're seeing a lot of fear in the market. We're seeing a ton of supply come in too, which is really nice. I think we're seeing divergence on a daily time frame. There's a few reasons to think we're pretty close to the bottom, if not at it. People will speculate, can we go to 10,000 or 8,000? Or once we start to feel this much fear in the market, we're getting much closer to the bottom, that's for sure. And in these times, again, the most productive thing to do is focus on community and service and product that is valuable, because that will never change. The prices of the things that we want will fluctuate drastically, especially when we're dealing with a potential currency collapse, like sidelining this too. So the dollar won't live forever, but it will live forever in infamy and in the memories of people. So just due to that branding, it may actually be able to withstand quite a bit of the nonsense that's going to take place here. So the second thing I wanted to go over here, aside from the potentially criminally malice capability of who we're dealing with here at a larger scale, this story has actually been around longer than I've been alive. So for some reason, we've been dealing with this same kind of story for longer than I've been alive, right? So depending on how old you are, most of you, I would assume, we're probably right around that age where if the corruption is so deep that it's been there for longer than you've been alive, I can't imagine what it would be like if we got rid of it. Because corruption means we're losing a lot of the value conversation along that chain. And that's hugely detrimental to everybody, as a matter of fact. So I think we're going to have a renaissance coming through this. I think prices and numbers of things are going to look all fucking stupid for a little while. Like it will appear that the value of something is not what you thought it was on all things. So that's a really weird one to deal with. When we look in the past, when these things start to break, it's a part of a breaking of the societal contract that really throws the value and price chain for a loop, or a loop-de-loop. Because what the value of something is and what the price of something is drastically different. So this is the dollar chart. This is the Dixie. Here we have on the left side of the chart where the green starts is 2015 and all the way to where we are today in 2022. As they tighten those rates, the strength in the dollar seems to increase. But we also could be looking at it kind of peaking out here, maybe at around 1010. I don't know. It's just because it's the cleanest dirty shirt doesn't mean it's not a dirty shirt. Right, so you're still wearing a dirty shirt here with the U.S. dollar, kind of regardless. What its value is it's better than the Zimbabwe dollar, but not much, maybe. I don't know, hard to say. Branding, or Brandon or something. So what does this mean? Well, we don't know. We are in. I talked about this moment over the last decade about when Wile E. Coyote starts to look down. This motherfucker has ran off a cliff. And until he looks down, he's able to stay kind of floating up in the sky. So one of the ways we had been watching this for a long time was the S&P 500, and this kind of, I don't think a lot of people note this. Although if you do watch the channel, you'll definitely recognize this and this sentiment. First off, we're really, really high up in the S&P 500. If you look from here, the far left-hand side, 1994, we have not returned to anywhere near 1994 levels. That's wild. And what's difficult is if we break the societal contract, the kind of just-in-time delivery system we have for food, water, electricity, heat, all that shit, if you break that, not only would we go back to 1994, we'd go back to like the 1940s, okay? There's technology, and the way we value and price it is probably a little bit out of whack with like the value of a pineapple and how we price it, or something like this. So I think that once this stuff starts to break, it's going to look really weird. I do suspect that the United States, because of all of its capability, and I would say largely its interest in psychedelics now, could allow it to lead the future. Like, I have a pretty clear indicator that the culture that takes psychedelics and uses technology will be the winner. It's not going to be China. You can't. It's just whatever they're building is way too far disconnected from nature. The winners will be those who can connect the conscious disconnects of what technology is missing, because tuning something is super important. And what this species has not figured out how to do yet is tune an engine like a little bit better. We're still burning like dragon toys to fly to sky. Like, it's it's pretty primitive. Okay, so the point of this is we're really high up. We're really high up, and if we're potentially dealing with criminality at an unimaginable level, look, there's no reason to say we don't go all the way back down to the 1940s where you're learning to cook with firewood again, because you could stranglehold this economy to that place, and this is where it's the most interesting, and this is why I still have a bet that they just keep printing at one point, because that's what they've done in the past. Not that the past has to repeat, but okay, so here again is the monetary supply over top of the S&P 500, and it is intrinsically linked. The S&P 500 has only gone up due to the inflationary process of printing more dollars and inflating the GDP. So what they've done is create more dollars and inflate the GDP, and we've known this for a long time, because for every dollar that we give out in credit, we produce like 56 cents in new product, right? So if we create $2 in debt and we're only creating like $1 in new value, our system is broken. And this is the part of inflation that most people don't understand. Inflation is a good thing if you have the money going to the people who are productive, right? If it goes to a place where it ends up people with more jobs and more opportunities effectively, right? When it's in the right place, the expansion of the monetary supply is fucking productive and useful. But when it ends up in the hands of nonsense, or like the fact that Janet Yellen still has a goddamn job after failing so miserably at the only fucking thing she had to potentially do, right? We keep hiring these retards. So what do we end up with? Well, we could end up with basically what's a cataclysm in the financial conversation, because there's nothing holding this market up at all. There's whatever is creating value here, there's about 50% of it that's totally garbage, and we're producing 50% of it that's totally trash. And so anyways, this could get chaotic. Now, in the past, what they don't do is keep tightening and keep screwing the market. They go, you know what? The constituents are unhappy. They need stimmy checks. People can't afford food, and they start to give out more money. See, the dumbest thing that these people are doing is like, oh well, if gas is too expensive, it's because of the people that are creating the gas. They're charging more. It's like, you moron, you have no idea how this game works. This is a game of supply and demand, and if there's only so much supply and only so much demand, the price will result from these two kind of clashing forces of interest, right? So you can't just create more money unless you're creating more demand, but would you basically give the money to the people to drill for more oil or something like this? Okay, well, they're create more oil, so we could create more supply. But what they try to do is they try to give the money to the people to buy more of the oil. Like, you fucking morons. This is not how this works. You can't give people money in hopes that they will increase. No, it'll only inflate the prices of things even more. So we're in this potential death spiral where they're going to tighten, and that's going to screw up the markets. No one will have money, so we'll go to deep recessions where you could be looking at massive retracements potentially, or they're going to continue to print at some point here along the way at some new point of interest rate. Where is it financially productive? And again, what's interesting here is if you are potentially dealing with criminals that have controlled the system for quite some time, I'm not saying that's the case, but every day we move forward here, it's like there's a pretty good argument for it. Like, wait a second. So brings us back to the core thesis. Well, we know what they can't corrupt, or they haven't been able to corrupt, was technology. And that's an interesting use case, right? Is things like encryption we have access to. Now, we have the ability to use tools that are probably far without the reach. Now, open source is going to provide us a better answer. Things like Bitcoin could be that solution. But we are dealing with a systemically deep problem that is older than I am. And when it starts to break, for whatever reason, whether it's through total stupidity or on purpose criminality, it's going to get weird. Prices are going to look weird. So anyways, keep that in mind. We could see like a disconnect of the pricing mechanism effectively. So that's why I never suggest using leverage. I suggest not getting into debt and focusing on consistent value creation. You know, we still have an all natural ginger tonic company here that pumps along in the background. So I think once you start to recognize the importance of, well, first off, what you should be doing with your life, what you're passionate about, and then what investing can do for you over time, is that especially in the moments when these break, actually. So here, let's see. Here, again, what we're looking at, the orange line is the monetary supply. The markers underneath is the speculation around the S&P 500. And as you can see, just a slight turnover in the printing press here and a raising of the rates so that nobody's taking out new loans, because they're expensive to do so. And a lot of people won't even be able to pay back their old loans now either. Like, mortgage rates are increasing. Like, a lot of the people that bought a house a year ago may not be able to afford that house anymore based off the new interest rates. It's that bad. So what are they going to do? We're between a rock and 8 other rocks and some hard places. There's not a whole lot of wiggle room for what happens next. So again, ultimately, have a laughy laugh at Mr. Saylor, but I technically agree with him. I don't think there are too many better assets in these types of times than Bitcoin. I also think cash is a good idea. Clearly, we've gone over this for most of our videos, but we try to have like 3 to 5 years of cash mapped out so that you can always operate. So that's, I always suggest people know what their budgets are. You try to focus on like a specific style and you work within that. And as things change, you adapt with that. You know, if you've got more spending capital that you want to invest in, you invest more at that time. If things are tight, you focus in, you get real lean on what you can, and you go there. You know. Anyways, there's one more point I wanted to get to. Oh yes. So we're seeing breakdowns across the planet now. Let's get rid of the monetary supply. These are the things that worry me. The things that worry me are these extremely high grain prices, the extremely high energy costs, effectively. These are all signs and symptoms of a deeply troubled society, and around the world too. So you probably won't notice it as quickly in the United States, but what's happening in Sri Lanka, there's food shortages in places like Pakistan. Whether it's manufactured or not, it's real for the people that are experiencing that. So even though it's not knocking on the door of the United States, it won't be knocking on the doors of countries like Canada, because they can, to some degree, still print enough stupidity to just keep buying stuff. At one point, that societal contract will break, and none of these numbers will make sense here. And the assets that you own and that you can travel with will be some of the most valuable, important assets to have in your portfolio. So whatever Bitcoin's price does from here, just make sure you're in a defensive position so that you're not at risk. Yeah, and then you're fine. Yeah, as long as you're not at risk for any positions that you've taken, you're fine. And that's we try to live by that, because this could get way weirder than whatever we think Bitcoin's price is at today. I was going to make that like top of the list clear, that aside from all the other stuff that's going on out there that's chaotic right now, if the societal contract breaks, it gets weird as fuck, guys. Like super duper weird. Yeah, it makes it hard. And again, remember, the people that have the most money in those situations, they become the targets. They always have been. In the Bolshevik Revolution, like if you had some shit that looked nice, the people aimed right at you, right? So this is these are imperatives to keep in mind as the world starts to go into a more and more uneasy place. Anyways, I wanted to go to some other things today too. Oh yeah, I want to take a look at the rest of the market. Boom. Let's start with some of the alt section. Matic all the way back down to the 2021 breakout of March, basically. Same with Same with Axie Infinity. Actually, we're almost back to June. We're going to be on our way back to the June highs for Axie Infinity. Solana, we are already back into our trading range as far as I remember. Where did our... oh, yeah, we're on the minute chart there for some silly reason. Okay, here we go. Yeah. So with Solana, we are already back to our... yeah, the bottom of our first breakout trading range. And what was interesting here, guys, is a few of you and myself in the private group, we started to look at the 3 peaks in a domed house thesis a little further. Oh, let's go back here. So, yeah, so Solana is already back to where we were in June 2021. So most of those gains have been erased. FTM all the way back down to July 20 bottoms. Link here too, another strong player, back down to the July 2020. So we're not that far away. Like, you go back here, what's interesting again too, just for like retrospect, right? This is the bottom of the market for Link in March of 2020. This was the peak of pandemic fear for Link. So when we're comparing something like Link or Bitcoin in the stock market, you know, their bottom is actually more relative to where the price was and how it got there to begin with through organic growth effectively. So even though you could make statements that Bitcoin could go down to 12 grand, I think it's unlikely. I think we're pretty close to local bottoms for these assets because of the way they put in local bottoms here basically in March. Like, you're not that, you go down another 50% for Link and you're at the local bottom of the pandemic. That's some impressive liquidity right there, right? Like, that basically means the entire bull market has reset and gone back to zero for Link. If that were the case, at least since March of 2020. I wanted to look at a few more. Oh yeah, let's go back. Let's actually do a whole roll sequence here. Here's Fetch. So again, here's our March 2020 low down here. Wow, what a run on Fetch. Yeah, nice. It was an explosive bull market. You know, the arguments about how people deal with profits, I think, is important. You know, I definitely think to myself, I should have spent more because my strategy has always been the same. Take out 3 to 5 years worth of capital and just keep living kind of the normal life I've built to enjoy without being like, oh, I'm going to buy $1 million car like, or $250,000 car. So there are there are ways to, I think, be more productive with profit during these cycles for sure, especially because some of these like Fetch and Matic just did so astronomically well for us. But a lot of Matic I sold out super early, and like I was out at most of the position at a smooth 10x, thinking I was a fucking rock star before it went up to like 100 and something. So a chunk of these positions I had exited too early anyways. Holding on to them to the end, like to where they are now, is like, okay, well, I'm just left with the initial position. So it's basically back down to below where I exited the first chunk. So I feel good about that. I feel good that a good part of the profit strategy back in of May had secured the next few years. But yeah, I definitely could have just been more patient. And this is one of the difficult parts is I was exiting too early, not too late on some of these. So let's be clear about this. Some of these I exited too early. There are a few I fumbled on for sure. Star Atlas was definitely one I fumbled on. I was a little bit too excited. And again, the Bear family. Some of you guys had made those early IEO investments where you had like 150x. You know, there's at least one member that invested $200 and made like 40 grand. And I think that she was not the only one. So we know that these bull market cycles are impressive, and taking profits is important. You know, as a kind of an entrepreneur mindset, I've just always gone by, what do I need to operate for the next 3 to 5 years? And that's been my base. But in terms of these wild growths, like I exited too early for some of these ones, not too late. Although it looks good now. Actually, I'm pretty sure if I measured out with Matic here, we're back at that point. Yeah, pretty much. Yeah, we're pretty much right back at the point where I had exited the position. So all of this extra upside, I was like basically not a non-participant for anyways, which is another 6x over top. Exit too early, too late. The markets are difficult to read. Let's go here. I wanted to take a look at NEAR as well. Let's go through and look at a bunch of these. Oh yes, Here, I thought it was interesting that this looks almost identical to a three peaks and a domed house. So for those of you that are in the private group, I'm sure you'll be interested in this conversation. A part of it is looking at the three peaks and a domed house, which we've gone over many times prior. There's a few other things I see you guys want me to chat about, which is largely the Celsius potential price breakdown. But I wanted to see, oh yes, here we go. So I wanted to share this, and it wasn't just Matic. It was actually, yeah, okay. So this is near, and the three peaks in a domed house drawing. Tell me those don't look almost textbook, and even more beautifully, look at Avalanche. So here's Avalanche, and it looks like a three peaks in a domed house almost identically. So what's interesting is that, I've been in markets for quite a long time, and I've had really never recognized this pattern up to today. And it's interesting, you think about someone who studies geometry or something like, okay, well, do you know what a dodecahedron is versus a tetrahedron or something like this? It's a very valid question. And I had really never seen the three peaks in a domed house idea up until this year. And just like our trading ranges and our accumulation ranges, it's kind of after the fact that you learn the value of the lesson. It's not until after you have a pandemic that you realize how important it is to fucking go all in when people are scared shitless like that. Like, that was the best time to invest, right? So because of that, I think what's unique is that I would have not recognized these patterns until after they've happened. So you kind of need a first, right? So, hey, I'm really excited to see that this pattern is playing out. Now, to the downside, it was Avalanche at $100, basically back down. What effectively we think could bring us back down to like $9 or $10, right? So we know that the space outside of Bitcoin is volatile. We're in this space because it's more closer to global decentralized venture capital in the period, and in effect, we think that there's a real need for it, right? So you try to build a theme that can withstand whatever nonsense is out there, even if it happens to be criminal nonsense that you're dealing with on the periphery. So I'm starting to think that we have a three peaks in a domed house like playing out pretty beautifully on all these. And we had gone over this before. So this is near that you see on the chart, and I wanted to go over and look at the Tesla one that we had recapped from this as well, just as a comparison. So this was the Tesla three peak and a domed house that I thought we witnessed too. And again, you have to remember that these are like animal footprints in the wild. They're going to show up slightly different, but you're looking for characteristics that are the same. Now, Tesla's three peaks and domed house didn't even return to 0.10. But again, when we look at the S&P 500, we see that 0.10 actually fluctuated quite a bit below, 0.28 fluctuated quite a bit below 0.10. Before we saw a retracement. So 0.10 effectively right here, whereas if we go all the way down to 0.28, it was still 13% lower than the first part of the box, right, that the S&P 500 went before it turned around very, very dramatically. Now this looks like a three peaked and a dome house thesis to me as well. Now again, the argument here is it as beautifully defined as these? Right, because this looks almost identical, like especially with this little trough here between 10 and 14. And again, I had never recognized these patterns before, so ultimately some of the things we learn that are most valuable just take time. I've been here for a decade. I've been looking at different charts and patterns, and this is the first time I've seen these kind of really play out and express themselves. So I think that we're seeing strong reversal patterns on multiple fronts, but it's going to come down to this core conversation of what do the monetary printers and potentially criminals do at this point? Do they do the stupidity thing? Is that the game they're playing, or are they playing the corrupt criminal game? One of those two. If they're playing the stupidity game, we'll probably get a lot more money printing. If they're playing the corrupt criminal game, we could see what could potentially be just the destruction of the markets, period. Like a forceful like planned demolition of the markets. We could be witnessing that right now. I'd hate to believe that that's the case, but goddamn, I don't see much evidence against it. Okay, almost 300 people on the live stream today. We usually only do streams early in the morning if the prices are really high or really low, so that's kind of fun. I'm gonna drink a little bit of coffee. I'm gonna roll over, take a look at the questions. If you guys haven't yet, give us a thumbs up. Smash that like button. I'm going to chill out for a little bit longer here too. So we'll do like a half an hour of ranting because y'all seem to enjoy especially now that things are getting really ridiculous, and have found a way to keep my tongue just by not saying specific words. So that's good. So let's go from there. Let's also... that video of Michael Saylor this morning. Don't use leverage to buy Bitcoin. Don't leverage your house to buy Bitcoin. They're all, although the prices of everything are going to look abstract too. So, but yeah, I guess you guys are going to want to chat about Celsius. That's a pretty interesting conversation. Let's see. I loaded up on HBAR and Link today. Good on you. Following a strategy, I hope. This is why we'll sell and not hodl. Diamond hands are beyond stupid. Yeah, I like taking profits, but I've often just exited too early in a lot of positions over time. And that's one of the hardest ones to recognize, is the asymmetric gains that you miss out on by taking profits early. Because you make a lot of money and you think you're going to buy, but it's so hard. It's easier to just consistently focus on accumulation. So that's what we're doing. Although we're still mostly focused on trying to invest in early video games, because that's the theme we like right now, and we try to make what we do as interesting as possible for ourselves. So yeah, we've got a podcast later today with the Planet Darewise, Life Beyond from Animoca Brands as well. I know that their alpha is going to be ready to play here in probably the next month, so that'll be fun. Jacob says, sadly, Celsius has already failed. I'm not sure about that, but maybe, yeah. KP Monty says, Bitcoin has failed once again to live up to its use case. I don't think that this is all the truth. This is not at all the truth, in my opinion. If I was in Sri Lanka and you were like, do you want US dollars cash? Do you want Bitcoin or USDC? You know, USDC is probably the better option, but USDC is actually using technology from Bitcoin. So hard gamble. But yeah, I'd much rather crypto, especially a crypto version of USDC. I guess it depends. In times of crisis, it's going to get difficult. Again, I think we're going to see a number go broke. Number's going to break. And we're going to see a huge disconnect between what you can actually buy Bitcoin for and what the currency exchange price is. It's not happening today, but I think it'll happen at one point. It'll basically be impossible to buy. You won't pay twice what it's worth. I think we see a moment like that. So I do believe that there's a point where the utility, the actual what Bitcoin can do, way the fuck outvalues its current price, and that's a value function. So I disagree with that it can't live up to its use case. It does every time. Every time someone walks across a border and can remember 24 words, Bitcoin has actually done what it's most valuable at doing, which is allow you to move informational value, data through space and time without an intermediary. That's fucking extraordinarily valuable. People just haven't recognized it because they live in a place of privilege most often. Luke Zelda, let's put the chart on the screen here. While we're chatting, because I'm sure people want to see that. So let's see. Meow meow kitty poop. That's a societal contract. Is gonna let it die. We're building. Yeah. Hopefully we don't end up in the Build Back Better propaganda building, but that's where they seem to be trying to aim us. Jesse Doe, nice, great to see you. Hope you're having a great day, bro. Much love. Yeah, it's a good day, beautiful day. Got a podcast here in an hour or two, so I'm happy. How do you cope with such big losses? You know, I was actually going to make a video called My Biggest Loss, but it had to do with me spreading the ashes of my grandma. So money is not really valuable in comparison with the things that are truly valuable within your life, like the experiences that you get and the people that you love and that love you. They're remarkably different in terms of function. So the biggest losses have not. I mean, money's easy. Just keep going, right? Unless you're really old and it gets harder and harder. But I could go totally broke, start over again. I'd be happy. Like, cool, let's do it again. it's even more confident about the potential here after all this. I could go. You could take everything away from me, start over again. It'd be fine. I think it's about recognizing the opportunity that exists. Like new, like unheard of opportunity exists pretty much every day. But who's taking advantage of it? Where is it? It's there somewhere. It looks different each time, but it's there. Let's see. Rovi says, no matter how much it drops from now on, it's really a nice price to accumulate. Yeah, we're in the box for accumulation for sure. Ava Bear says, it's great to have you as a coach over the past year. I'm not sure how I would have been doing personally or emotionally over the course of a year without it. Awesome. I'm glad to hear that. I think because so many new people show up to the market, as the markets are really high, the best thing that we could have done at that point was just consistency. Find what you can afford to invest every month and basically ignore the volatility of the price so you don't get washed out. Because most people joined the market too late. Like the views that we are getting on our videos when we're trying to scream everyone to buy Bitcoin was like $9,000 right after the pandemic, versus when Bitcoin was $60,000 was like an order of magnitude, is like 3 times higher. So we try to be consistent. So I'm glad that strategy of consistency has worked out for you, Ava. I appreciate that. Santander broke of a name. Nice. He's actually Santander's bringing up a great article. He says, which investor are you? This is called Timing the Market. It's one of my favorite articles. So, and hold on, I'm going to bring it. It says, are you Peter Perfect or Matthew Monthly? I think Matthew Monthly is the better one. And there's also, which one is the Buy Right the Fuck Now Brian or something like that? I'm going to open this up because this is a great little article. And I hope all of you read this one. I've shared it in our previous videos. There's a few different sentiments of what we look at here. So it was this one, if you want to look it up. It's called How to Time the Market Perfectly. And it's actually an article here by Schwab that I'm gonna share with you guys, because I think that this is a really valuable sentiment. So it says, we ran the numbers on timing our findings, and there's a high cost to waiting for the best entry point. So here's 5 different investment styles and how they recorded this data. It says, but you don't have to take our word for it. You can continue to read our research of 5 hypothetical long-term investors following very different investment strategies. Now, this is on a small basis too, but just for recollection. Each received $2,000 at the beginning of the year for the 20 years ending in 2020, and left money in the stock market represented by the S&P 500 index. So this is, again, somewhat biased based on what and where they're investing and how long the time frame is, and it's a retrospective study, so it goes back the last 20 years. And it says, while we do recommend diversifying your portfolio with mixed assets for your goals and risk tolerance, we're focusing on stocks to illustrate the impact on market timing, period. So this is how they fared. You've got Mr. Peter Perfect. He was the perfect market timer ever, picking pebbles like a fucking pickered pecker. Pebble. You don't know what the hell I'm saying. This is why you say nonsense in the morning. I love the rant modes. I love these rant versions because they're just ridiculous. If any of you have ever freestyle talked on video before, it's fun because part of what you're trying to do is just say what's happening without thinking too much. So you say ridiculous things like whatever the hell just came out of my mouth. Okay. For example, Peter had to invest $2,000 at the start of 2001. Rather than putting it immediately into the market, he waited and invested on September 21st, 2001. That's the lowest closing level for the S&P 500. And at the beginning of 2002, Peter received another $2,000. He waited and invested the money perfectly on October 9th, 2002, the lowest closing level for the market for that year. He continued to invest his investments perfectly every year throughout the year 2020. That's fucking amazing. Congratulator, Peter, fucking perfect. You executed a flawless investment strategy. Okay, let's take a look at Ashley Action. This is the one who I think everyone should take more of an interest in, is in Ashley Action, because she's the one who's going to mess around, and every time she's got extra capital, she's going to play around with stuff that she thinks interesting. So Ashley Action took a simple, consistent approach. Each year, the day she received that cash, she invested the $2,000 and walked the fuck away and never thought about it again. Meanwhile, Peter Perfect be digging into the screens every day. He's lost 30% of his eyesight and can't see. Okay, so just remember, there's consequences for Ashley Action and Peter Perfect. Matthew Monthly, who's another pretty easy one to suggest, and I think this is a great way to go because you can just set a date in your calendar based off whatever your revenue and your budget seem to fit in. He invested his $2,000 into 12 equal portions, which he invested at the beginning of each month. This strategy is also known as dollar cost averaging. You may already be doing this through your regular investments at a 401k, etc., although we don't suggest keeping any money in a 401k. It's probably risky as shit, which allows you to deposit money into investments like mutual funds and scalable and set time frames. Rosie Rotten, oh my God, she had incredibly poor timing, perhaps even bad luck as it might appear, and she invested $2,000 each year at the market's fucking top. This Rosie just getting all of them wrong, buying the fucking all-time high like a chumpy chump, and she invested her first $2,000 on January 30th, 2001. That was the highest closing level for that year, the S&P, and then she continued to do that improperly for the next 20 years preceding afterwards, always buying the top. Rosie Rotten, congratulations. You did something that actually most people do, which is follow the hype cycle. You buy when everything looks like it's the most valuable because the price is so high, and they're not correlated. Larry Linger here, on the other hand, though, he left his money in cash. Nothing but treasury bills for this guy, and he never got around to investing at all. He was convinced that lower stock prices and therefore better opportunities to invest his money were just around the corner, so Larry Linger ended up with cash. So the results, investing immediately paid off. Ashley Action, here we go. Even bad timing trumps inertia. Here we've got perfect timing. Mr. Peter Perfect definitely leading the pack, but also losing 30% of his ability to see from staring at a screen every goddamn day to get that perfect price entry at $151,000 over the course of that 2020 growth cycle. Again, this is $2,000 a year for 20 years, ending up with 150 grand. So pretty moderate, pretty proportional, but again, also shows the power of investing. Immediately investing, which is our Ashley Action investor, at 135,000, actually outpacing the dollar cost averaging. This is a really interesting one. The fact that both investing immediately and dollar cost averaging over time actually performs very well, just a bit lower than Mr. Peter Perfect over here. And Rosie Rotten, out of all of her mistakes, you know what she did right? She still invested. And even though she managed to fuck up all her all-time high investments, she still did really well. And I think that this is a really important, or stay in cash. Right, so this is the difficult part, is you can stay in cash, you risk it, right? And you go through the up and down cycles, markets are difficult. But when you give yourself a 10 or 20 year time frame, which is what this data does, it shows the results that are much more likely for those of you that are investing properly. So thanks for bringing that one up. I thought that was a fun little article. Ashley Action, ladies and gentlemen, one of the better type investment theses out there. Just buy when you can. If today's a good day, it's a good day. But do that for 20 fucking years, and that's where the result comes in, not timing the market perfect. Okay, let's see here. Mike Lafrance says, reading Reminiscence of a Stock Operator right now. It's a great book. I highly suggest that one. Enjoy that book, Mike. It's fun. Jay Dabu says, this is simply liquidity crunch, technical support lines being broken and traded on. Nice. What do you see the bottom for Bitcoin? I think we're in the bottom. I'm not going to try to get it right exactly. When we were at like 17 grand, it was come back down. Like, I could go to 1500. Went to 3. I'm like, okay, it's close enough. But was it, everyone hoped it wouldn't go below 6 too. So this is just the way it works. We are seeing long positions, liquidations, business as usual. Yeah, there's some big longs that were taken out that just got absolutely liquidated. Over $778 million has been liquidated in the crypto market in the past. Nice. You can't liquidate Saylor because his company is generating revenue. They generate like $100 million in revenue every quarter, I think. So they're not cash poor. That's why they started buying more Bitcoin, is because they had a lot of cash. As far as I know, I could be wrong there. Let's see. Milton Bates said there's nothing wrong with trying to time the buy in the bottom. Yeah. We're just looking at, I mean, personally, I'd rather hang out with Ashley Action than Peter Perfect. I mean, the portfolio difference is negligible. TJ Graham says, Ashley Action is also the type of girl you can have a nice conversation with in a pub. Peter Perfect is the guy you want to slap in the pub. This may be true, right? Like, if you look at the personality type of who you'd want to spend time with, you're like, Ashley Action sounds like a lot of fun. We're going surfing and shit. She got time to surf. Peter Perfect's too busy staring at the screen. Okay, let's see. R122 FNM, this MicroStrategy has a $250 million term loan and needs to maintain a foreign collateral. Yeah, but I believe MicroStrategy does like $100 million a quarter in revenue. That's why they started doing this. So it doesn't sound like a big deal. Although they did go a bit heavy on taking out like loans for MicroStrategies to buy more Bitcoin when it was around $46,000. So that was a little weird. Why not just spend the revenue? I mean, why would you take on a loan when you're generating revenue? You'd be more patient too. Anyways, I don't know. That was a weird one. Let's see here. Gabriel Sparks is 120,000 from 4,000. No, it was from $2,000 every year for 20 years. So that'd be from 40,000. And it was just the S&P 500 that data came from. Jesse says Saylor wouldn't come close to liquidation until 3,600. He has excess capital. 30 million a quarter. Okay, yeah. So MicroStrategies right now is doing $30 million in revenue a quarter. And he says that, and Jesse is quite well versed in MicroStrategies here, also saying that the loans were on 5-year terms. So nothing that wouldn't change anything. It's actually spread out through a lot of time. He's buying master right now. Well, there you go. Look at that. He stands by his own confidence. There you go. I think we've. Let's take a look here. Although we are rolling up on the hour, so I'm probably going to want to start to rein it in here. I got a podcast here in about an hour, so I'll probably want to get ready for that, I guess. Go sit by the pool and drink some coffee for a minute. I want to thank you all for joining us on today's live stream. Yeah, $22,070. Look at that. It's a nice break off here. Where are we since 40? Yeah, already down 50% since that $46,000 mark. Ethereum, actually, let's just quickly look at Ethereum and Cardano, because I think I wrote it in the chart here. $1,180 Ethereum. It's fallen. All the way back down, almost all the way back down to our primary regression line. Nice, yeah, a primary regression line here at $1,000 for Ethereum. Let's see where. Oh, I think I deleted the primary regression lines for Bitcoin. Yeah, we pretty much have already broken into. Oh, wait, hold on. Actually, we're like right at the primary regression line for Bitcoin. That's interesting. Well, there you go. So we're right at the primary regression line for Bitcoin, and we are about to hit it for Ethereum, which is down near 1,000, 960 effectively. Yeah, once we broke that top regression line, we fell pretty much dramatically afterwards. I think the same happened with Bitcoin here. We'll have to go back and redraw the regression lines that we had from those first charts. At least our primary regression line is exactly where we're at now too. So the rest of them would end up like this. Yeah, see, once we broke this regression line, we were basically screwed. We've collapsed the entire drop to the primary regression in a single go. So yeah, those regression lines are powerful for sure. Here was our last one off that too. So yeah, we couldn't stay above that top regression line for almost any time. Both of these, all the way back down to the bottom regression line. I thought for sure we were gonna turn around at 29 grand. But again, we did measure in that lower 13% drop to still equate this position. But damn, it's never fun. It's never fun. Mostly because, actually on the bright side, I'm a hell of a lot more confident this time than we were in 2017, because all of the companies that we were investing in didn't raise in Ethereum. They raised in US dollars, and they're hiring like madmen right now. Some of these guys raised, each one of these games raised like $20 to $30 million, some of them more, to keep building their games. So they're on a hiring rant, which is drastically different. Like back in 2017, a lot of those companies had raised everything in Ethereum, and they lost all of their runway to build anything. Like even if they had a good team, I think Aave was one of them too. They basically were building out of leftovers. So be interesting to see how it develops. Again, we've got billions of dollars on the sideline for the venture capital part of this sector, and you got billions of dollars on the sideline that are going to be interested in accumulating Bitcoin. We don't even have too much lower to go before we're back at previous all-time highs as well. So mostly a patience game. We make investments every month, but mostly into the game sector. But it looks like we're going to be turning back on larger investments into Bitcoin again on a month-over-month basis too. So I held them pretty low. I mean, we were even accumulating more back in that 50 grand range, but it was quite low still. Anyways, thank you all for joining us to deal with the Arcane Bear. I appreciate all you guys. I hope you're having a wonderful time. Again, everything looks fine and normal. I'm just a little worried about criminality maybe at a global scale. Damn, that would be rough, right? I mean, is the system collapsing, the mother of all bubbles? Yeah, maybe. We got to keep an eye on that. Cool. Awesome. Great to chat with everyone. Thank you guys all. It's always fun. I'm going to go sit out in the sunshine and drink some of my morning chaga coffee. Yeah, we've got a podcast in an hour. And their game goes live here at the end of June too. So pretty excited to chat with Darewise founder Vincent. And we've got a few more coming up actually. Nyan Heroes. But by the way, guys, I'm just head over heels for games now. I'm even I think I'm gonna buy Elden Ring. Before you know it, we're gonna end up streaming games on this channel. Just screw it, guys. We're gonna play games for the next month while people get their shit together with prices again. We led into this thinking that games are going to be the most interesting, and there's a bunch of these games that are going to be coming out with their product over the next little while. And it's fun to kind of have a little bit of a transition. Finance is a little bit contentious. Video games are probably less likely to be able to tell from a technical standpoint who the winners are going to be, but just more enjoyable in general. So I'm pretty excited about that part. Yeah, I look forward to dropping in and chatting again soon. Thank you all, Bear family. We'll see you guys again in the next episode. Bam.